Hi, everyone, and welcome to today's Webinar Wednesday. My name is Megan Santangelo, and today we are joined by James Kay, who's our Director of Risk and Underwriting. And today, James is going to be explaining how to effectively detect threats and protect you and your merchants from fraudulent submissions. So, James, if you're ready, we can jump in. And just as an aside, should you have questions, please enter them in the chat and Q&A, and we'll be sure to address those at the close of the presentation. Thank you all.
Well, thank you, Megan. Hi, everyone. So I'm James. I've been here for 9 years. Most of you have, well, some of you have had some interaction with me, and if you haven't, I guess that's a good thing. But I've been here for 9 years in the industry for over 15. It's been a while. I've seen a lot of stuff, and I'm excited to share some insights with you guys. So let's just jump right in. So I'm going to be talking about underwriting, and we'll be covering some key areas in the underwriting and risk world and how it pertains to detecting and mitigating fraud. With underwriting, I'll be discussing why the procedures are important. I'll be giving you guys hints on documentation to include in your submission to help with our review. We'll be touching on how to identify fraud accounts on the ground floor. So that's in underwriting. And then in the risk world, I'll be talking about what risk is and why it's important, the types of risk and fraud that we see, the importance of knowing your customer. Everyone loves some KYC. And some risk mitigation through our reviews, what we do and how we do things, just to get you familiar with the process. So it's not something that's completely blindsiding your office or the merchant. So first and foremost, we'll jump into the underwriting procedures. Our philosophy is to approve bona fide, high-quality merchants to accept credit cards as quickly as possible. We want to be as efficient as possible. We don't want to waste your time or the merchant's time because we know that time is very important. But first, we have to verify the business and signer. Verifying the business and signer are not only the bank requirements, but it reduces losses that EPI may suffer. We do that through various online searches, reviewing documentation that is submitted, and reviewing the credit report. You can help too if you receive an online or phone lead. Just do a cursory search to make sure the business is real. Of course, if you're walking into the business and the person is physically signing with you, that's totally unnecessary. Does the personal credit impact approval? It does. The credit report allows us to assess the merchant's financial character and their willingness or unwillingness to pay debt. If the merchant's struggling to pay debts, we could just be another unpaid debt. So that's something that we do look out for, and we do get concerned with. Again, we want to be as efficient as possible. So our goal is to reduce the amount of back and forth regarding documentation. It allows us to approve quicker. It also, it shows off to the merchant that we're, organized, well-run, things like that. The least amount of touches is the best. We do our best to research on our end and ask for all documentation upfront. So you only need to go to the merchant once. Sometimes we do ask for additional information after we receive the first round of documentation, because sometimes the more questions may arise. And lastly, we do have the unqualified businesses. The unacceptable merchant list can be found under the documents portion in the ISO interface. Unfortunately, there's no debate about unqualified businesses, as the policy is set by the bank. The bank has taken massive losses in some industries, such as timeshare resellers and loan modification companies, and others are against Visa and MasterCard regulations, such as adult services and online nicotine products. The good news is that some of those businesses we've been unable to write in the past, we now can through Sigma. It's the perfect platform for your smoke shops and CBD shops and businesses focusing on adult retail products. So the documentation, excuse me. So first and foremost, for our documentation, first step is to verify the business. We need the completed merchant processing application. We look for the completed MPA that includes the tax ID, correct business and ownership, owner information, ownership equity. It must be a minimum of 50%. It can be split up amongst multiple owners. or have a corporate resolution designating an authorized signer to be used. Accurate annual volume and the chip key estimates and site survey information. We'll also need a beneficial ownership addendum for anyone owning 25% or more of the business that's not listed on the MPA. Also, I want to remind everyone that an American Express addendum is no longer needed if you're using the most recent merchant processing application. So you can get that on the ISO interface under the document section. Just go download the new MPA. You could do it right this second. You could download that one along with our Sigma app. Neither of them need the American Express addendum. And another reminder that on Clover deals staying on the Omaha backend, a Trans-Armor paperwork is no longer needed. You know, we love less documentation. It's always the best way. So moving on to documents that we do need. We do need documents to confirm the business at the location, and the best ones are a utility bill, a lease agreement, pictures, corporation paperwork. Those are all important to submit with the deal. A business license or a permit could be a tax certificate, health inspection, a liquor license, anything else that puts that business there that is provided by a government authority or a county authority or something of the sort. Previous processing or bank statements are very helpful as well, and they can be used to confirm the business at the address. A website used for marketing purposes helps. And of course, if it's an e-commerce only merchant, it's required along with the terms and conditions, privacy, refund, and shipping policies. And while it's not required, it's strongly recommended the merchant implement a CAPTCHA or reCAPTCHA to protect against those pesky bots doing card testing. I've seen it before where merchants, it goes over a weekend and the authorizations ring up over six figures, 100,000 authorizations. And each authorization, there's a cost to that authorization. So, it's 10 cents, 15 cents, however the merchant is priced, that authorization gets charged to the merchant, unfortunately. So there is a cost when there is some kind of a bot attack. And volumes and key percentages should make sense for the industry. Usually we have preconceived ideas on high tickets and volumes for different industries. For example, auto body, we know the run-of-the-mill auto body sale is going to be somewhere in the $5,000 to $10,000 range, and sometimes we'll see $15,000. So a high ticket of $5,000 won't really make sense for that business usually. So if a merchant is telling you, oh, my high ticket's $2,500 and they're doing auto body, you can push back a little bit and say, you sure? Maybe we should get it higher. Because if not, then it's going to get unnecessarily held up in risk. And what the merchant typically does in their day-to-day, they're going to say, well, how come I'm not getting paid on this $5,000 sale? It's my normal business. Well, that's because your high ticket is $2,500. So it's just something just to keep in mind when you're out there. And we ask for the documents because either we can't find them, we're not able to verify the business using our other resources, and we're required to have documentation on file for each merchant we board. The more you're able to submit on the front end, the better, excuse me, the better we can do our job. The next step is verifying the signer. So how do we do that? So have the merchant sign the personal guarantee, the MPA in sections 10 and 11, and the confirmation page. This provides us permission to pull credit and match and shows us the merchant is willing to guarantee the account. Secondly, send in a driver's license. This helps us validate signatures and confirm the home address. This is one of the most common things people fake, and usually the quality is very poor. We find fraud using the driver's license, especially with business ID theft. It's very, very easy. Social security number, it assists us in pulling the FICO score, excuse me. Poor credit may require additional documentation. If we see missed payments on credit cards, mortgages, or liens, etc., like I said before, we feel as if the merchant may not take any fees or debt payments seriously with us. Also, we're able to check to see if there's an ID alert. With all the breaches that have happened, these have become more commonplace. And if there's a phone number on the ID alert, we must speak to the principal. If there's no phone number, we have to send a letter to the most recent address listed on that credit report. We'll reach out to the principal's home number and ask a few validating questions to clear the ID alert if that's what it really takes. We review recent inquiries and previous employment on their credit. It helps us identify a fraud application. Many inquiries and a different place or industry of employment are red flags to us. We have seen a few deals come in without a social security number for one reason or another. Most of the time, we can get it using other information provided from the owner, but it's optimal to have it for each deal. Secondly, it allows us to conduct a full match search. So the social security number is required to search match to confirm if a merchant is on the TMF list. Merchants who have committed fraud or who have had excessive chargebacks, among other things, are placed on this list, and we should not be processing for them. There is an exception with identity theft, as long as it's the true business owners submitting an application for processing, we can get that approved, but we do have to go through an ID alert process on our end to make sure the customer is who they say they are. Lastly, we can search OFAC. So OFAC stands for the Office of Foreign Asset Control. It involves sanctions against certain individuals, companies, and countries. It's against federal law for us to conduct business with a person or entity that conducts business with or in a certain country, such as the Balkans, Belarus, Burma, Ivory Coast, Cuba, Democratic Republic of Congo, Iran, Iraq, Liberia, North Korea, Sudan, Syria, and Zimbabwe. There is a designated nationals list that is very comprehensive. We do run OFAC on all of our signers and our businesses once a month. So we get pinged we do get pings if we have a merchant that is operating that in such a way. So let's jump to identifying a fraud account. There are many signs of a fraud account, but here's just a few for you guys. So the client finds you online. Most fraud accounts we come across are web leads. And when I say most, I mean all. It's rare that you're going to walk into a business, speak to somebody, and that's going to turn out to be fraudulent. 99.999% of the time, somebody has found your website and has emailed you asking for merchant services, saying that they need a terminal ASAP. They're down and they need help, no matter the cost. If you get something like that, please make us aware if you have any concerns about that or the source of the deal. The documents will appear forged or invalid. We see a lot of documentation every day, and we've come across many fakes. So we know what looks real, what doesn't, what looks right, what looks photoshopped. The driver's license is the easiest to spot, but we've seen voided checks, bank statements, processing statements, business licenses. We've seen everything forged. If you feel like something looks a little off to you, feel free to share. Occasionally, signatures won't match with other documentation that's submitted. This isn't as common, but we've seen differences that give us pause. It makes us take a step back and review everything again. Also, like I said before, the customer's in a rush. They don't care about rates. The customer's pushing really hard to get the deal done, and they say yes to everything, including higher rates. They might request a rush on equipment, want to overnight everything. They don't care if it costs them an arm and a leg. It's usually not a concern for them, but that's a concern for us. And continuing, so card not present versus card present merchants. A merchant that operates in the card not present space tend to have higher rates of fraud because it's easier to use fake card numbers and go undetected. As you can imagine, it takes a little bit of effort to create fake counterfeit cards, counterfeit chips, things like that. So a lot of times it's the card not present space that kind of gets us. It's very important we work together to verify merchants that operate in this kind of a space. So we just ask you to get as much information as possible. It'll be easier for us to approve it or identify if something is off with the submission. Card present merchants are usually legitimate businesses. We can find a lot of information online. We may request additional information to cross-reference our findings, though. The best information to verify the business is pictures of the signage, stock, lease, et cetera, et cetera. Home-based businesses, they're higher risk. If the merchant is a home-based business, a lot of times the information is not easily available online. The bad actor may be hoping for a quick approval. Many times the businesses that turn out to be fraudulent are contractors, and this is why we ask for statements and some marketing, which could be, um, excuse me, some marketing. This is why we're always a bit tougher on these ones and ask for statements. Or a picture or a brochure or something to be submitted with the deal. So why do we ask for the information? We have to follow guidelines set forth by the acquiring banks to ensure we're upholding the integrity of the payments process. The more documentation we receive, the better. It allows us to detect inconsistencies and prevent fraud. If we do find inconsistencies or the merchant has poor credit, we may ask for additional information. In addition to following guidelines, we must safeguard EPI from fraud and prevent us from being put in an undesirable position. Every merchant account that comes in, we must assess the risk on, which is why filling out page 2 with the expected delivery timeframe and deposit percentage is so important. We want to know the customer like you guys know your customer. And that brings us to knowing your customer. You guys are the first line of defense. You're the most important piece of the puzzle. You may see paperwork or have interactions with merchants that could raise some red flags. Let us know. If you have a bad feeling about something, let us know. It doesn't hurt. If you know your customer or deal with through a good referral source, it lessens the likelihood of fraud. Let us know your background with the merchant, whether it's a family member, a friend, or he or she's been a customer for 10 years and you're just switching them to EPI because we're simply the best. It always helps us in the process. If something doesn't feel right about a deal, share your thoughts with us as well. We'll take an extra close look at it. It may end up being best to walk away from a deal sometimes. And just keep in mind, we don't know your customer. We may still ask for additional documentation if we feel we need it or it's required by the bank. All right, so here's some red flags. I mean, a lot of this is just reiterating everything we've already seen, but want to touch upon it again because it is so important. There are many red flags that you need to be aware of. Internet leads, can't stress this enough, internet, email leads. Don't take them. If it's not your bread and butter, don't take them. We don't want them. They're probably going to end up being bad. If it's something that your office focuses on, great. Then that's normal for you and you're vetting them and everything. But if you're mainly a feet on the street kind of a office, internet leads are something that you should stay away from. Not meeting your customer, if the customer finds you out of the blue, it's a red flag. Meeting or talking to someone over the phone gives you a better understanding of the applicant's intentions. Addresses, if the address is local to you and doesn't make sense, let us know. It's likely it's a questionable deal. Information on the MPA. Email addresses typically associated with fraud accounts are older ones that are easy to obtain, such as AOL.com, Hotmail, and Live.com. It doesn't mean the deal is fraud, but using this information coupled with other factors may lead us in that direction. This assigned volumes. As stated before, if they don't make sense with the industry, it should be questioned. For merchants looking to just jam to thinking that they're going to get an application auto approved or what have you, they may lie on their volumes and they want it approved ASAP so they can start processing and start committing fraud right away. They'll have lower volumes for an industry than standard for the industry. The DBAs, if we have a lot of construction home-based businesses using the signers names that are legitimate, but when we see a signer's name as the DBA, it is a factor we do need to consider. It doesn't mean it's fraud, but it is a concern. Unusual business or legal name, repetitive words, combinations of letters and numbers, or signer's name being used, or a completely different name being used in the DBA, aka the signer's name is Joe Smith, but the business is called Steve's Plumbing. That's obviously a red flag. I mean, we've seen it before where we've had something like Joe Smith Steve's Plumbing is the business name, and it's like Joe's Roofing at hotmail.com is the email address that comes in. I mean, things like that. Those are glaring red flags on our end. Last but not least, forged documents. As we talked about before, most forgeries are easy to spot. If you think something could be forged, give us your 2 cents. This is a partnership, and we welcome your assistance. And by helping protect DPI, you're helping protect your profits. Statistics. As you can imagine, fraud is out of control, and we experience a very small part of it on our end. There were over 2.5 million reports of fraud in 2023, costing the consumer over $10 billion. ID theft has increased from 650,000 reports in 2019 to over 1 million last year. It's been declining since the beginning of COVID, but it's still over 1 million, which is significant. Fraud has been surging in other sectors as well. There has been an 82% increase in government benefits fraud, which I'm not sure if your offices have experienced it, have read about it, have heard about it, but electronic benefits transfer, EBT fraud is sky high. It has been covered in the news, especially locally here in New York. We've seen it. People check their EBT balances and find that their cards are drained. And these people, they have no way to get their money back because the EBT is not a credit card, so they don't have the same protections. So ID theft, let's see, ID theft has made up nearly 50% of the fraud that's occurred. All right, so let's get into the fun stuff. Risk. So in this section, I'm going to cover what risk is, how we calculate it, the types of risk, the types of fraud, and then everyone's least favorite part of it, how we mitigate the risk. Nobody likes this. So what is risk? It's an estimation or actual financial harm a merchant's business can do to the merchant provider. EPI, we are essentially offering a line of credit. All merchants provide products or services that have an assumed quality assurance. That means the merchant will deliver a product on time, accept returns for the product, and guarantee the quality of the product. If the merchant does not deliver the product on time or at all, does not accept returns, or produces a below average product, customers will not be satisfied, which results in refunds, or worse, chargebacks. It's all about customer perception. If the customer feels like they were overpromised on products or services and feel undersold, they complain. If those complaints go unmet, they charge back because the bank is always on their side. The bank's not on our side. The bank is on the cardholder side. If the merchant can't pay for their refunds or chargebacks, then the merchant provider, us, we're on the hook. We have to guarantee these merchant accounts to make sure that the banks don't take a loss. So what drives risk? There's variables that mitigate and elevate risk. So longevity. A newer business does elevate the risk. The longevity of a business speaks to its success and customer satisfaction. A new business doesn't have that track record yet. So sometimes we're a little harder on new businesses in the underwriting world and in the risk world when there's a larger transaction. Stability. A financially unstable business lessens our confidence that the business will have the means at any given time to cover the risk. This can be evidenced in financials or bank statements. Low banking with many negative balances is a red flag for us. And sometimes financials could indicate a downward trend in business stability. But this is why we ask for banking on high ticket requests, because we need to make sure the merchant can support those high tickets that they will run. And we assume those high tickets are going to happen, once a week, 3 times a month, something like that. So we assess whether or not they're supportive based off of that notion. Certain industries pose more risk than others due to delivery time frame and the ability to attract fraudsters. As discussed, contractors of any sort create the most ID theft situations on our books. Merchants that get victimized are usually done so over the phone, but sometimes a third party is in person, making it seem more legitimate. Card present is inherently safer than card not present. Restaurants are generally the safest in terms of credit risk, as people will only pay if they're satisfied. The customer has the control there. Customers are paying and leaving a retail store with a product. Chip and signature, well, we don't need signature anymore, but chip will reduce the chargeback liability and allow the merchants to respond to a chargeback if one does occur. E-commerce customers rely on third party to source the product and ship it, which could take multiple days. And drop shipping is high risk because the merchant doesn't have control over that inventory, along with a future delivery aspect of it. And then lastly, service-related industries such as travel agents, contractors, web design, all have varying timeframes, but most of them require a deposit with an extended delivery timeframe. If previous account was a good standing with us, it's likely that processing history will carry over. The new account, if they're adding a location, it's likely a new account will be as well. If there's a collections balance on that previous account, that's going to need to be cleared up before we can review a new account. The credit score, it shows us an overall picture of the principal's financial character. Do they make payments on time? Are they in collections? Do they have established credit? Do they have an ID alert? How many recent inquiries? The answer to all those questions affect our judgment on whether or not the business can support the risk. And lastly, billing method. If the merchant has recurring billing, they need to be mindful to turn it off when a customer cancels. Otherwise, chargebacks may occur. Types of risk. So there's two subsets of risk. There's actual risk versus potential risk. Actual risk is real dollars and cents that we can label as our risk that's been processed through the merchant account. This is common with fraud-centric sales, whether the merchant account is completely bogus or our very legitimate merchant got ripped off. Whatever sales that come through from the fraudsters, that's our risk, and that's actual risk. Potential risk is estimated amount EPI is at risk for on an account. Usually it's only realized if a business failure occurs with an extended delivery time frame. The transactions could be disputed because of non-delivery of products or services. End of month fees, chargeback fees, all that stuff, it's all taken into account. And then there's fraud and credit fraud risk involves accounts opened with stolen identity where a legitimate merchant is victimized, or collusion scenarios. We've come across many business ID theft situations over the past few years, and they're always internet leads. Don't sign up internet if you don't do it on the normal basis. And there's credit risk. So the furniture store with a 30-day delivery time frame processing $100,000 per month carries a risk of $100,000. The risk is mitigated using our findings from reviewing the merchant's credit score, statements, longevity, and stability. If you know the delivery time frame at Underwriting, please share with us in an email or make sure to fill out the section appropriately on page 2. So these are the common types of fraud that we run into. It comes in all shapes and sizes. There's ID theft. Common victims of ID theft include doctors, dentists, the occasional retail businesses, and any other profession where a lot of information is public. There's merchant fraud where everything seemingly verifies new business and account open with the sole intent to commit fraud. So this business could be registered, it could be a brand new business, but the only reason they want to have a business is to commit fraud. There could be some kind of collusion or bust out scenario where I have a merchant account and you have a couple of cards using stolen identities. You want to run those cards to my machine for cash advances. Sometimes this is coupled with bust out fraud where the cardholders will send payment, quote unquote payment, and the issuer will raise the limit until that payment is processed and found to be bogus. Usually this is in form of passing bad checks. This has become a little less common with the implementation of EMV technology, which has been real help to the industry. It is the toughest fraud to spot, though. And then there's refund fraud, which is merchants issuing refunds without the intent to pay. This can happen with legitimate businesses who are going belly up, or it's a merchant is getting ripped off by an employee where the employee is issuing refunds to their own cards, to their friends' cards, or what have you. Doesn't affect EPI's bottom line, but it does affect us reputationally because we should be catching that kind of stuff. Usually the merchants are very happy when we bring it up to them and explain to them that this is what's happening, and hopefully they can remediate the situation on their end. There's counterfeit fraud. This is where you will need to educate your merchants. Usually the merchant's not involved. The credit card accounts are opened using stolen information. They're characterized by poor authorizations and sales done on multiple cards sharing the same issuers. The merchant could be accepting 3 different cards, but they're all issued by Chase Bank. All start with 42466, and that's a Chase Bank BIN. And they could be completely different cards except for the first 6 digits. That's a huge indicator that the merchant is being ripped off. Sometimes the merchants ask to overcharge the cards and wire funds to a third-party shipper. We just ran into a scenario where a pub accepted a transaction for $7,000 in change, and they were asked to forward $5,000 for band fees or whatever it was, forward it to the band for the event that was going to take place this past weekend. Now there's a chargeback for fraud on the account. We're still actually actively reviewing this and investigating what happened to confirm the story. I don't know if the event actually took place. However, if the event didn't take place, then to me, that is the same scam as the overcharging the cards and wire funds to a third-party shipper, except you have one person booking a party, and then the merchant is booking a band, maybe at the customer's request, and then wiring funds to that band, and then that band, quote unquote, the band, is then taking the money, and then they're basically stealing the money. So it's just something to keep in mind. The fraud comes in all shapes and sizes. It's wild social engineering scams that happen. We've seen an increase in refund fraud where the stolen card's charged by an unwitting merchant. And then the same customer calls in later or the next day and asks for a refund to a different card. Usually that refund is going to a prepaid card, a reloadable debit card. And the card that's being charged is stolen. So the merchant is being used as a money mule to just move money from a bona fide cardholder's credit card to the scammer's prepaid card. So that's something to keep a lookout for if a merchant calls you and just ask questions about it. If a merchant calls in and they're uneasy about any transaction, please notify Risk right away. So our email address is risk@electronicpayments.com. It's going to be on the last slide. You're going to have my phone number. You're going to have Underwriting's information. So there's no excuse not to notify us if you hear something funky. So these are red flags. I want you to share this with your merchants. Educate, take a screenshot of this, pull this down when the webinar gets uploaded, take this webinar, show it to your merchants so they can see that this is coming right from their processor. We want to make sure that merchants are aware of these red flags. Over the phone transactions, when the business normally only accepts in-person transactions, should be easy to spot for them. But a lot of times there's a story that makes the merchant feel really comfortable and really great about the sale. And next thing you know, there's a truck to pick up 100 tires or 20 bales of hay. And in 30 days, chargebacks roll in. Anytime that the merchant gets something like this, and if they feel that they really want to push forward with that transaction, let us know. We will talk to them and try and talk them out of the transaction. If they still push to get this transaction processed, we will advise them to make sure the person picking up the product provides them with a valid photo ID, that person picking up the product is indeed the cardholder, and that the customer pay at the time of pickup. So we can do an authorization or something now to see if the money is available on the card, and then when the product is being picked up, they can chip the transaction so they know it's so it protects them against fraud. Sale is too good to be true. It sticks out like a sore thumb. I mean, this goes hand in hand with this over the phone transaction, but generally the merchant believes they're making their month or their year with this one single transaction. Oftentimes it's bogus and does lead to a loss for the merchant, and sometimes EPI, because these merchants are generally smaller that accept a larger than normal sale like this. The chip is not working. In this scenario, the card looks real. It might even feel real, but the chip is completely false. It's a counterfeit card with a fake chip. This is an This is an in-person interaction where the fraudster walks into the store and says, hey, I want to pay for this product, this 100 bags of mulch, whatever. Here's my card. Takes the card, everything looks real, looks great. Chip doesn't work 3 times. Generally speaking, if the chip is failing, then the terminal should be prompting for a fallback transaction to use to use the magnetic strip in the back. And if it doesn't do that, and the customer says, "Oh no, just key it in. The card number is valid, but the chip is fake and the card is fake as a whole." We see this really often. We see this often in liquor stores and some other low risk retail shops. And then more than one card is being presented. This happens when the merchant receives one card and a decline happens. Then the customer produces another card, sometimes with different AVS information. Additionally, merchants may be presented with multiple cards and told to process certain amounts on the cards because the bad actors already know how much they can put on each card or how much they believe they can get by with. Billing and shipping addresses are different. This one's a classic example of easy to spot fraud. Merchants should always be shipping to the billing address. Occasionally, those addresses will be different, but a lot of times it's a larger company making those purchases. The customer insists on setting up delivery. This is another example of clear-cut fraud. Very easy to spot. Merchants should never wire funds to a third-party shipping company picked out by the customer. They should always set up their own delivery. If the customer is picking up the item, the merchant should be demanding to see the card being used and rerun it as a chip transaction, like I said before. This reduces fraud. So now we jump up to phishing. So phishing is, we all know normal run-of-the-mill emails. On average, 3.4 billion of those emails are sent every day. Some phishing attempts are a little harder to identify as bad actors are getting smarter. There's spear phishing, and these emails are sent to a specific person and has very specific details and may request some kind of a bill payment or bank transfer. There's something called whaling, which is less common with small businesses, but still a concern, normally coming from the CEO and preys on employees' willingness to follow directions. Usually will include a request to transfer money or something. It could be that you're purchasing a bunch of gift cards for your CEO who's stuck in a meeting, and that then he wants you to send all the gift cards, pictures of the gift cards front and back to him. This is complete fraud. We do get notifications from our one and only Michael Nardi to tell us not to do that for him ever, that he will never, ever ask us to purchase gift cards on his behalf because he will never need us to purchase gift cards on his behalf. He can do it on his own. There's something called smishing and vishing. It's all the same, but it's using phone calls and text messages to get the same exact information. And then there's angler phishing, where bad actors will prey on people's reliance of social media, and they may mimic an account to extract information. Okay, so how do we mitigate the risk? So there's risk on every single account that comes through our doors. From small restaurants to the travel agency, everyone has risk. The biggest trend we've seen this year is where fraudsters are posing as car owners or fleet managers, getting the cars repaired. They're using stolen cards to pay for the services over the phone and sending a third party to pick them up. As stated before, the information we find out about an account or principal helps mitigate, risk mitigation starts in underwriting. So anything we find out in the beginning helps us mitigate the potential risk we may encounter. And it continues after the account begins processing. The merchant needs to be involved. They need to be on the lookout for suspicious customers. They also need to be very wary of customers willing to overpay for product or asking to wire funds to a third-party shipping company. Authorizations, I can't stress it enough. If merchants are receiving declines, they should not be accepting the sale. Multiple decline sales from the same customer usually equals fraud, especially if they're using different cards and keying the sales. Almost a slam dunk when the chip doesn't work or they need to make a phone call during the transaction to go talk to their bank, quote unquote. We may ask for an invoice to validate a large sale or if something seems off. We do this not only to protect ourselves, but also the merchant. If the merchant wants to raise their average ticket or their high ticket, we would ask them to send over bank statements or bank statement summary pages, because I know bank statements are kind of intrusive. So just the summary pages are what we like to see. We like to see what the merchant keeps in their bank account month to month, to confirm their financial stability. We have other internal risk controls that we utilize to identify questionable or higher risk merchants. And then there's reserves and shutdowns. EPI may feel it necessary during review to take a reserve on a merchant's account. It's not everyone's favorite result, but it is something that we do need to do sometimes. We'll take reserves in one of three ways: by holding back all of the merchant's batches. We'll place a debit on the merchant's bank account directly, or we'll set up a merchant on a rolling reserve to build the reserve from their batches, and then it hits a target amount and shuts off automatically. Or after speaking with the merchant and getting some kind of comfort level with them, we would set up some kind of a rolling reserve where we might take 50% of each batch. So they do get some funding, and then we get to pay off a balance or hold a reserve on the account. Reserves may be held to offset ongoing risk the merchant may not be able to support. So if an account has a reserve and we close it, we could hold the funds from 2 months up to an entire year to offset any kind of chargeback risk. Okay, so just to wrap it up, so fraud and risk mitigation starts in underwriting. An ounce of prevention is worth a pound in cure. If we can prevent fraud before it starts, then we all win. I recommend you know what's needed prior to submission. Refer to this deck, check the underwriting guidelines, email underwriting with an inquiry, or email me directly. Keep in mind, when you do email underwriting directly with an inquiry, we will tell you what kind of documentation you would need to submit. We would tell you if a business is qualified with us, but we're not going to do a full-on pre-underwriting of an account before you send over the MPA. We have seen that a bunch in this year, I guess, where some offices are looking for us to pre-approve an account before we get the MPA. Keep in mind, we can't do that because we are inundated on our end anyway with a bunch of other new accounts where we actually have paper applications, or digital applications. So I recommend that keep your inquiries short and sweet. Can we do this business model? Yes or no? What do you recommend we submit for this business? And then we can, we'll talk openly with you. We'll get back to you within 24 to 48 hours. Sometimes it's difficult to respond to those emails. Risk comes in all forms, and we might not ever realize it. From the mom and pop convenience store to online furniture stores, risk varies, and losses could come from anywhere. Know your customer. Can't be stressed enough. This will undoubtedly help in avoiding fraud accounts. It will make it easier for you to obtain information as a sales agent. I think cultivating the relationship as a payment professional. You're the expert. They're not the expert. The merchants know that they take a credit card, they get paid. That's what they know. You know everything else. And then we know all the other things that you don't know as far as risk and things like that. So, we're all a team here, and our job is to support those small businesses, those mom and pop shops, where their job is to just push product, make money, make a living for their family. It's our job to be the professionals and the experts in everything. So it's easy for us to cultivate a relationship and get documentation that we need without having to, hurt a relationship. We'll need to mitigate risk by holding reserves at times, and we do everything else before gathering a reserve. We do our best to lessen the impact on the merchant, but the main focus is to receive payment on any outstanding debts and prevent any future losses to electronic payments. And we're all on the same team with the same goal. We want to prevent financial harm to the merchants and to electronic payments. And that's it. So if you have any questions for general underwriting or risk needs, email underwriting@electronicpayments.com, email risk@electronicpayments.com. If you need to speak to me for any reason, there's my contact information, my phone number, and my email address. So I hope this was helpful. I hope this helped everyone understand where risk and underwriting do come from when we are being pains in the necks. But I am ready for some questions if you have them. That's that.
Right, it looks like we had not so much a question, but a statement by Lloyd. So Lloyd, thank you. Lloyd's been with EPI for quite some time, so we appreciate you joining us here, Lloyd. And he just wanted to mention that over the years, he's had many fraudulent apps that have come in, and in most of the cases, they all want a virtual terminal and have it be 100% keyed. So thank you, Lloyd, for that insight.
Yeah, I appreciate that, Lloyd. Yes, everyone loves the good ProCharge virtual terminal. That's where we've seen like 95% of the fraud committed, like straight ID theft fraud.
It looks like we have a question in the chat from Joe. Thank you, Joe, for joining us. He's asking if there is a comprehensive document that covers all of the documents that need to be requested and strategies to consider.
Well, when you're saying strategies to consider, are we talking about the fraud prevention, or are we talking about underwriting, submissions? Because we don't have anything in writing, like a document that we can provide that's public facing, I should say. We don't have any public facing documents for fraud prevention strategies or things like that. But like I said, you could take this webinar, take this deck. You can show them the red flags. I mean, these are a lot of this stuff is more or less common sense, and I get it because they're sometimes small business owners, they don't think like I think, they don't think like you think. So it's different perspectives. So their common sense might be different than our common sense. But it is something that we don't have publicly available. It's something that maybe I could look into making to assist for fraud prevention. As far as underwriting documentation is concerned, we don't have we don't have a public facing document. We have an internal document as far as what's required for what kind of business model. But for the most part, we find a lot of things online. If you're looking to submit a business for underwriting, always submit processing statements. I can't stress that enough. Processing statements help us see that there's no chargebacks, or helps us see that there is chargebacks, helps us confirm volumes, helps us confirm the average tickets, the high tickets, addresses, things like that. Processing statements are gold. If the high ticket's going to be higher than, say, $15,000, I would recommend maybe submitting some bank statements to go along with it. If it's a higher risk nature of business, it's like a custom furniture store, something like that, something that carries some kind of an extended delivery time frame, always submit bank statements, because we're going to ask for that, because that just makes things a lot riskier.
Thank you, James. It looks like we have a pretty detailed question in the chat. If you want to pull that up from Dren. Dren, thank you for joining us.
Okay, let me just get to see. All right, let me get to the chat here. All right. So, excuse me a moment while I read this chat. It is very comprehensive. So the question is, the iPOS by Deja Vu, they have a feature where the invoice can be sent via a link, and the user on the other end can open the link and enter the card number. If the question is, if fraud occurs and the customer starts entering multiple card numbers, does the merchant get notified? And would this be considered card not present when the link is sent? And would we recommend using or not using this way to accept payment? So as far as the merchant being notified, I can't speak for that. I do not know how it works with iPOS, but that is something that I imagine there is a setting where the customer would get notified if the transaction gets declined. And that's some setting that would be toggled. And I don't know if the system allows for multiple attempts. I don't know if it's a one-time link that gets sent out or not. I don't have that information, but that is something that I can bring up to Deja Vu and kind of inquire about and see if there is some kind of a setting that, that the merchants can implement. And to answer the second part of your question, this is considered card not present because it's not a chip or EMV transaction. It is still going through a gateway. It is still a virtual terminal. It might be going to an email address associated with the customer, but it is still considered a card not present sale. This is still a Moto transaction, if you will. And would I recommend it? It's 6 of one, half dozen of another. I mean, if it works for the merchant and it's normal for them to accept transactions like this and makes life easier for them, as long as they are vetting their customers and they're making sure that their customers aren't, fraudsters, yeah, it works. If it works for them, they can use it. We have these options for a reason because, most of the transactions going through these payment systems, these payment gateways, 99% of these transactions, they're totally fine. So, of course, I would recommend it.
Great. Thank you, James. And thank you, Trem, for the question. Dan has a question here. I know that this was assessing risk for merchants and fraudulent apps. Is there any sort of risk associated as an ISO agent with this territory?
So as an ISO agent, as far as your risk for these bad merchants, I mean, if we, I don't want to overstep my bounds here, but I can only imagine that if we see a consistent stream of bad applications coming through, then it could result in, some kind of a higher level discussion about the ISO office's activities and things like that, and maybe kind of steer you guys in a better direction in how to submit apps. As far as monetarily, it's whatever the Schedule A dictates. Everyone's got a different Schedule A as far as I understand. So if your Schedule A is stating that you're going to own all the risk on your portfolio, then yes, what you submit, what the merchants process that could end up being your risk as a sales office and could potentially cost you money. But as far as penalties or things being passed to you without prior agreement, prior knowledge, that's not something that we do here.
Great. Thank you, James. And Jen, you can certainly reach out to ISO support with any direct questions on that, solely because I don't think James can fully speak to that. But James, that was a good overview, so thank you.
It was an excellent political answer, right? No, I don't know.
Anybody else have any questions out there? Feel free to enter them into the QA and chat. And James, if you wouldn't mind just bringing that presentation up again, I just want to cover the last 2 slides while we give everybody some time to submit questions if they have them.
Yes, I hit the button by accident. Hold on a second. Let me get it back up here.
No problem. And in the meantime, I did receive a few direct questions. As always, we will be sending out a recording of this presentation along with the deck. So if there's anything missed or anything, excuse me, or anything that you may have any follow-up questions on, you'll have all of the materials that you're going to need, and we'll send that out to you hopefully within the next few business days. We just have to wait for the file to render and all of that. So we will be sending that to you. And then, James, if you could just advance to the next slide for me. I just wanted to draw.
I've been discarded. Now I'm a marketing tool. Thank you.
I just wanted to draw everyone's attention. We have another webinar Wednesday coming up, and it is hosted by another one of our vendor partners. Some of you may know him from previous Impact conferences. We're doing a Valor webinar covering all of their top solutions, and it's going to be hosted by Gene Schemberg, who's their Senior VP of Sales. which is a great topic. So we'll send out reminders for that as well. And as you all know, I'll be hitting up your inboxes the day prior. And then in addition to that, James, we have one more slide. I just want to push our impact registration. I see a lot of familiar faces on here. A lot of you I know have registered because I've seen it. If you haven't yet, this is really a great place to be. There's lots of information, lots of panel discussions, lots of meet and greets, and then, we have lots of fun. And this year we're extending it by a day. So anyone who wants to join us a little bit earlier, we've got some fun optional activities lined up. We're doing Battlefield Vegas, where you'll be picked up by a Humvee at Planet Hollywood and brought to Vegas's largest shooting range. And they also have a military museum. And then we have also rented out Top Golf Vegas, and we'll have VIP treatment, food, drinks, all the games you can play, really a good time. And obviously outside of the education. So if you haven't registered, if maybe you're a newer partner to EPI and you're interested in what all the hype is about, visit impactepi.com. We'd love to see you there. And that's really my pitch for today, guys.
Well, thank you, Megan. And can we look to do something kind of like that on Long Island too with like our office? That'd be great. Be a lot of fun.
Sure can.
I appreciate everyone for joining us for the webinar today. Thank you so much, and I appreciate your respect and your inquiries as always. And if you guys have any questions, we shut down this webinar and say, "Oh man, I totally forgot to ask this question." Shoot me over an email. I'm available. As you can tell, I'm pretty lax on this kind of stuff. So send me your questions. I'm open book.
Yeah, James is a great contact here. He knows what he's talking about. So if you have any specific questions, feel free to email him. It's james.k@electronicpayments.com. He'd be happy to help you out. And thank you, James, for your time today. Thank you all for joining us. As always, we really appreciate it. We do these for you, and we're glad to see you here. So hopefully we will see you on our next webinar Wednesday with Valor. Thank you all, and have a great day.